How's it going, guys? Hope you're all well. In today's video I'm going to do kind of a price action review, a little trade recap video. So I've not actually done one of these videos for a while now, and the reason is because I've been working on my trade plan and I've actually changed my trading style quite a lot. As you will know if you've watched my YouTube channel before, what you will know is that I did focus a lot on supply and demand concepts, and what I'm more focused on now is liquidity. So I'm kind of focusing more on liquidity. I don't actually really play off supply and demand zones anymore. I will be aware of them if there's a clear one, that we are tapping into and it does, line up as well with my liquidity points that I'm looking to trade from. But overall, I'm more focused on liquidity rather than supply and demand. Another thing that I've done is I've also lowered my risk to reward targets. So as you will know, again, if you've watched my YouTube channel, is that I did used to just target 1 to 10. And at the time it did work, and when I was also trading lower capital on a personal account, a couple of £100, it did work, and obviously I would catch those big trades, those 1 to 10s. But once I started getting more capital, then it did really play on my psychology. So what I took the conscious decision then just to lower my risk to reward, increase my win rate, and therefore just have a little bit more mental clarity when I'm trading. So like I've just said before, I do focus a lot now on liquidity. So I'm looking for double tops, I'm looking for old highs and lows, I'm looking for equal highs and lows, I'm looking for previous day highs and lows, I'm looking for weekly, previous week highs and lows, and these are the kind of places that I'm going to be playing from. So obviously if you are trading and you're looking at a daily high and low, a daily high or low, just know that the weekly high or low will hold more weight. So you will get a bigger reaction from a weekly high and low than you will from a daily high and low, and things like that. And obviously you want to pair this up with kind of structure and just the overall trend of the market. You don't want to be trading long here, short here, long here, short here kind of thing. You don't want to be just taking trades everywhere, because that's not good for your account, and you will go ahead and take a lot of losses, especially if you're entering on the lower time frames. So what I'll do now is I'll just go into bar replay, and once I drop into bar replay I will kind of sort of around this area. So this is kind of what I was seeing once I got to my desk this morning, and this is the kind of price action that I was seeing. So for me, what I've seen is my most previous and my most recent break of structure would be this one right here. This is a clear break of structure, a clear pullback, clear break. There's a lot of momentum in the market right here, and my idea for today, kind of without any higher time frame analysis, what I was thinking is that we could come back down into discount, or sort of into the OTE of the range. So if you don't know what OTE means, it's sort of just an ICT concept. So OTE, if I just go ahead and mark this out, so just go ahead and OTE. So down in this section right here would be the OTE of the range. If you want to know the settings for that it would be the 0.62 and the 0.79. So these are the settings for the OTE. So that was my idea overall for today. Pull back into discount or into the OTE of the range. And then what I was thinking is if we come up and we sweep this previous daily high right here, I would then be happy to look to take a trade back into the range right here. So if I just mark this out as a red line, just to obviously go ahead and show where my liquidity is resting. So what I was doing is I was waiting for this high to be taken out, and obviously what I can do is I can also put on the Asian range. So the Asian range is also there as a confluence. So if we come up and take out the Asian range and also take out the previous daily high, what we could see is we could see a nice reaction back into this range, and we could come sort of down into sort of the discount or the OTE. So if I just mark that out again, don't know why it's disappeared. But yeah, we could come back down into sort of this area of this leg right here. So what's happening now is we start coming up quite aggressively right here, and what you will notice is we do come up and we do wick above this previous daily high and also above the Asian range. What you'd want to do then is you would want to drop down onto your lower time frame, which would be obviously the 1 minute or whatever you use. For me personally, I kind of enter the market a little bit differently to the standard market structure shift or the change of character. I'm not actually going to show my personal entry model in today's video, but what I can do is I'll show you kind of the chalk and the the ICT entry model. So what we can do is we can start looking now for where our market structure shift will be. As you can see, we're coming down quite aggressive right here, and if we just go ahead and mark out the low that we want to see go. So we want to see this low go right here. And if you're thinking, what are these triangles above and below my candles, it's just a fractal. So, you know, if you go ahead and get the fractals by Nephew Sam, this is the indicator that I'm using, and all this shows is more prominent highs and lows within the market. So as you can see, this low right here is a clear low in the market, and this is the low that we are waiting to see go to see a market structure shift. So once we go ahead and get this break right here, you know, price does come down, you know, a little bit more, and then what we can do is we can start to mark up our premium and discount of this displacement leg right here, just to give us a little bit more confluence on the fair value gap that we want to use. So if I mark up our 0.5, as you can see, the fair value gap, the first fair value gap in premium would be this one right here. And what I will do is I will mark this up. As you can see, that is our fair value gap, so FVG. And what you can do now is you can set your order on this level right here. You can put your stop above the high. For me personally, as I said before, obviously we're looking, if we go back up to the 15 minute, as I've said a million times before, we're looking for price to come down to sort of the discount or the OTE of the range. So what I was looking for is I was happy to take at least a 5R from this trade. You know, this is a trade that I did take, but not using this entry model. So if I drop back down now to the 1 minute, and let's just see what happens right here. So if I just move this over, and what you could do is you could also target, you know, clear sell side liquidity, which, you know, a lot of ICT traders do. You could target this low right here. But for me, as you can see, the overall idea was for us to come lower. So I would be happy to target a little bit lower if you are happy to do that. So let's just see what happens within price, and let's just see how price goes ahead and plays out. As you can see, it trades back up. We have not yet broken this low. We then go ahead, tap into this area, taps perfectly into our fair value gap. You know, our stop loss here has got a lot of room to breathe. It's a 5 pip stop loss, which is, you know, absolutely fine. And then as you can see, what happens is we start moving away. At this point, you would probably be break even. So we're around 2R now, so we would be break even. And this trade is now risk free. And then as you can see, price does run towards TP quite quick. We get a little bit of a pullback and a little bit of a consolidation around this point, but then, you know, price continues and ultimately takes out the 5R target. So what I'll do now is I'll go back up to the 15 minute. That would be our London session done, or your day done, maybe even the week done if you've got a big enough account. What you can do then is obviously wait for New York session if you want to trade New York. If you miss this opportunity right here and you're only trading New York session, obviously this would be, you know, kind of irrelevant. So let's just see what happens towards the afternoon. As you can see, price is coming up. It's making, you know, sort of a little bit of a pullback right here. And obviously we're now in around, you know, sort of the discount. And obviously we've got such momentum to the downside. What I was thinking now is we could come down and we could target somewhere towards maybe this. Or what we could do is if we go back up to the 1 hour chart, what you will notice is we've got, you know, a nice order block right here. So we could come down to at least this point, which is in the OTE. So that was kind of my thinking. So obviously if we go back to the 15 minute, what I was thinking now is if we come up and take liquidity from above this fractal high right here, we could see a further trade to the downside, targeting at least this area over here. So let's just see what happens when we come in towards New York session. And obviously New York session for me would be starting at 1 PM GMT, the UK time. As you can see now, we've come down, we've obviously traded back above this high. So for me now, I would be happy to go and look for a trade. So dropping down onto the 1 minute. Again, I didn't take any trades this afternoon, you know, after taking a trade up here. Obviously now what I'll do is I'll show you again the, you know, as the same as the previous entry model over here. So let's just see what's happening. As you can see, we've traded above. And then what you will notice is then we come back down. We've taken out this low right here. So this would be a market structure shift. So we've got a market structure shift right here. And then what you will notice is we do go ahead and we do actually trade back above this. So depending on where your stop loss would be, is, you know, you might take a loss right here. So let's just have a look what our stop loss would be. Stop loss on the fair value gap, you know, stop above the high. You know, I like to have a 5 pip stop loss, you know, on average. So for me personally, I might actually stay in this trade, but, you know, some people might want to cover this by, like, you know, let's say 0.5 pips, which would obviously get you taken out of this. So let's just assume that we've taken a loss right here. Where can we get now back into the market? So as you can see, our fractal low that we want to go would be this one. So once we break this low, this would mean that we would then be starting to see again a market structure shift. So let's just see what happens. As you can see, we break that low right there and we immediately pull back into our fair value gap. So we break this low, which would be an MSS, so market structure shift. You would then enter on this fair value gap right here. Stop above the high, give your trade a little bit of a buffer. For me, again, as I said, I do like around a 5 pip stop. As you can see, I would then target somewhere towards down here. You might want to target this. So that would be around a 4-hour trade, which would be absolutely fine, and that is all you really need. As you can see, then we come down, you might go break even right there. So let's just see what we're running at. So 1.36R, so you might not actually go break even yet, depending on your rules. So we go ahead and we then trade down towards the downside. You may want to go ahead and close out this trade because we've got news, which does kick in a little bit later on. But you would actually be fine. And then as you can see, TP would be hit, and this is where I did say we might want to run down to. But what you will notice if we go out of bar replay is once the news come out, we did just plummet through the floor. So if I just come out of bar replay, as you can see, price just literally, dropped through the floor right there, and you would be running now at around 18%. But obviously, I don't recommend personally trading through news. I would have probably taken profit and I closed out this trade myself if I was, if I did take this live. But like I said, this is the overall way that I'm trading now. I'm looking for liquidity sweeps. I'm looking for buy side and sell side liquidity to be taken before looking for my entry model. For me personally, it's a much more easier way to trade. You're not having to go and find the, the most perfect supply and demand zone, whatever it may be. You can still be aware of this. Like if I go back up to the 15-minute, as you will notice, is that this trade does actually tap into, sort of a nice 15-minute zone right here. So that could also be an added confluence if you want to use that. As you can see, what you would then have is this right here would be, excuse me, let's just go back onto EU. As you can see, this right here would be your inducement. So obviously, supply and demand concepts still do work, but obviously what I was looking for is I was literally just looking for this high to be taken before looking for my entry. So obviously, if you were going to trade like this, you could use supply and demand zones as a confluence, but overall they're not actually needed. So this is the way that I'm trading at the moment, guys. If you're interested in kind of the way that I'm trading and the way that I'm entering the market, which is a little bit different to this, I might bring a video out on that at a later date if you guys are interested. If you're interested, feel free to leave a comment in the comment section down below. If this video did help you out, guys, please leave a like on today's video. If you have any questions, as always, feel free to drop them in the comments as well. And without further ado, guys, thank you very much for watching, and I will see you in the next one.